All right, it appears that we are live and we are recording. We're recording on TV as well. So, okay, ladies and gentlemen, my goal for this live stream, for those of you that are watching, is to give you an update on the strategy that I told you I would bring to the table for the foreseeable future of you starting with a very small amount of money and how I'm trading. And obviously, it's not advice, but this is a way, a route that I am going to just show people you don't need a lot of money to trade because, as I've said before, I'm your friend of success, right? I've started the Rob Review. I started it years ago to differentiate financial education from what really is the education of building a financial behemoth of a business through the stock market. There's a lot of financial education out there, but the stock market is a one of a kind place, a wealth vehicle that's been around since the 1900s. Before that, but the American Stock Exchange in New York, the Chicago Mercantile, chop it up any segment of time, 10-year period going back to the 1900s, it has built fortunes. The majority of the people listed on the Forbes list of wealthiest people in America are there because of the stock they own in quality companies that either their family started or they bought into. It's a blueprint, and you have to start where you are. So today's live stream, the idea is to talk about the truth about stress-free stock market income and the secrets that Wall Street keeps about that taboo topic, because there is $1 trillion or more a year. I think it's more in the lines of multiple trillions at this point across the globe of financial education, financial advice, financial funds that are built specifically around the mindset that if you stay inside the structure of the bubble, that you need somebody to help you, then Wall Street wins. And you may win, but more than often you're going to lump yourself in a pool of people that do not get wealthy from the stock market, because less than 5% of people that actually invest in the stock market achieve their long-term wealth goals through the fund or the vehicle of their choice in the stock market, which means it doesn't work. If huge funds work the way they once did back in the 60s, then you would still have multiple millionaires being minted every year from their investments that they made years ago. You don't have that anymore. That being said, I believe the stock market is an ever evolving entity, and you have to evolve with it. You have to change your tactics, and that's why building a stock market business works. That being said, I'd be an idiot if I wasn't to sit here and say that having somebody to help you can accelerate your growth curve. Having those advisors, every advisor is not created equal. I myself am going through the education right now to get licensed as both a financial advisor and then eventually many more things to come from that. Because my goal right now is to start some kind of fund down the road and to really help people as optimally as I can. And I can't just help you from across the screen as much as I can if we sit down and I really manage your money, but I can't do that with everyone. That's why I believe that you don't need me. You just benefit from the relationship as I benefit from the relationship. But you yourself need to first mint the education. Excuse me, I'm sorry. And you yourself have to determine how you're going to use it, how you're going to build your stock market business to fund and form around the life that you want, because I'm about building a lifestyle business through the stock market. Somebody said the other day in my comments, dude, you're talking about lifestyle. That's all my mentors ever taught me. And trust me, you don't see them doing this kind of stuff. But that's because They built lifestyle so they don't have to come out in front, so that they can live lives of anonymity while also investing and building and being community advocates in my community, in my state. I do it because before I ever thought about the Robb Review, I went to school for this. I run a television station. I am the guy to do this kind of stuff because this is my life. I live in a studio right here. There's a green screen behind me, huge freaking wall. What does that matter? It just matters to show you that I'm not here to build a business off the back of poisoning your growth or trying to sell you thing after thing after thing. I want to see you succeed. I'm your friend in success, for crying out loud. Wall Street and the stock market does not give a damn about you. And it doesn't give a damn about me. I mean, that is the reality of it. You can only make money in the stock market if you're able to come to terms with the fact that somebody, especially on the trade, is going to lose for you to win. That's why you want to be the guy with the edge, the guy that's there to win, the prepared person. And that's what I want you to be, the most prepared person in the room. So today we're talking about the truth. The truth is that stock market income can only be stress-free if first and foremost you realize that it is a mindset foundation built upon education and preparation and complete relief. Relief's the wrong word. Complete removal of your ability to think about money different than everybody else. You have to depart your money from your emotions, and then you can have stress-free income from the stock market. Yes, dividends are very little work. Yes, once you have $1 million+ in the market, you can mint yourself 10% a year pretty darn easy. I can definitely, with confidence, because I do it every month, mint 3 to 5% a month. So $1 million, you're talking $50,000 to $30,000, $30,000 to $50,000 a month. That is stress-free, but really, is it? Because I'm putting $1 million into a stock trade when I do that. I'm just selling covered calls, and so it's relatively protected. The stress-free does not come from the vehicle or the button or the thing. It comes from the mindset. Wall Street wants you to believe that you need the CNBCs of the world. You need the up-to-date data. You need to be diversified. You need to have multiple layers of financial this, that, and the other stacked, and paying all these fees and having all these newsletters to keep up to date, to stay educated, informed. And if you're informed, you can be stress-free. But in my opinion, the more you layer on, the more stress it becomes. I want 3 things from the stock market. And I believe you can't get any simpler than this unless you already have a lot of money. Number 1, I want vehicles to build wealth. My target is 25% a year, and eventually live off that 25% a year, as dividend style income doesn't have to be a paid dividend, because I invest in lots of different vehicles, not just stock. Number 2, I want income from the stock market that allows me to have lifestyle separate from the wealth income that will eventually come down the road. I want income now that I can build on monthly. And number 3, and the reason I did it backwards is because long-term investment comes first, then income, then exponential growth of small amounts of money through stock trading. That's the pillars that I've always been taught. That's the system that allowed me to build success in the stock market. The same system that will allow me to I started an account. Here's an update on the account. XSP. I'm trading short 5 to 2 days to expiration options on XSP, which is a derivative of the S&P. Not derivative, but just a mini. The NASDAQ, which really I'm trading the QQQs, and eventually I'm going to build up to trading the Russell because it moves really well. Those small days to expiration moves, They have to be targeted. You have to be right now. If the bid backs up, you got to get out, or at least I do. But you can afford to buy one contract or two contracts for $200, $300, $400 and build an account. So what I did, October, started an account, $425. Did one trade in October. I'm now up 126%. To the rest of November to January, I'll do that, trading that particular strategy, and I'll keep you updated. And if you want more, go join the newsletter, theundercreditinvestor.com. And I'm actually giving breakdowns of the trades there. I could do it on YouTube, I guess, and maybe I might, but I don't want to get myself into trouble by, advice, right? There's other things that you can trade for less. I know that, micro and mini futures are out there. I know that you can trade derivatives. There's all kinds of stuff, but I don't trade that kind of stuff yet. Futures, eventually, I'm working on a strategy there, but I know that pretty much everybody out there can come up with $500, even if it takes you months to save. And then if you target yourself one trade a month and slowly compound that money, it's going to take a really long time, and I'm going to show you how long it's going to take to get from 400 to 10,000. But then at 10, you're going to change the strategy up, and you're going to be able to buy longer term options and trade a little bit more flexible. And then that 10,000 will roll into 100,000 quicker. And now I've never built past a $100,000 account yet, so I can't tell you how fast it goes from 100,000 to $1 million, but I know people that have, and it starts to really compound at that point. As long as you're moving what I call your X, the amount of money you're putting in a trade on a regular basis, you can grow your money from 100,000 to $1 million way faster. And then, that's proven time and time again. That's no news. The idea here is that I don't know a lot of places out there that I can enter a trade on the 24th, sell it on the 27th. Really should have held it the 28th and make 200%. I made 126. I could have made 200% if I'd held it for one more day. But I stayed. My trading plan, I got in at 680 for the 681 calls. My trading plan was to get out at 685. It hit 685. I was out. So I did the trade right. I just did a little bit scared. And that's okay to do in the beginning because you're never going to go broke taking a profit, right? I don't know a lot of places you can do that kind of return that's legal. So that being said, we're going to do some videos now around the same topic. So I'd like to get started with my videos. Okay. Video 1. It's going to be called Trading a $50 stock versus a $350 stock. Are you ready? Let's dig in. Hey everybody, welcome back to the Rob Review. I'm your friend of success, Robert Morris. Today I'm talking about trading a $50 stock versus a $350 stock. Anything below 50, anything above 350, it's just a range. But you and I both know that if you're an active stock trader, stuff that a lot of people trade nowadays, it's hard to find a stock that's less than $300 a share. The reality behind why this matters is if you are stuck as a trader and you are grinding it out and you're just not seeing the performance you want to from your money, generally speaking, it comes down to 3 key things that you're doing that need to be changed or improved upon or tweaked. And the first thing is always going to come down to, what are you trading? And does it move? If you're trading a stock that's less than $50 a share, the options typically don't move enough that you're going to get any movement out of the option, so you're not trading the option. So you're not getting enough leverage out of your money in the first place. Number 2, the stock doesn't move because that's where you start. Typically speaking, a $200 a share plus stock doesn't mean it moves. I hit my mic and I'm sorry about that. So let's cut that right there. What it means is that stock has the potential to go on my list of tradable stocks. If the stock has a movement of a minimum of $5 a week, then it goes into my further criteria to study up on. I don't trade anything that doesn't move at least $5 a week minimum. And I love for the options to move really well too, because I trade options, not stock. However, I believe you have to do both to have success in the stock market, because on that token, I talk about a lot covered calls and those types of things for income. I don't know about you, but $800 stocks, $300 stocks, I don't have the kind of dough to be buying 200, 300, 400 shares of that stock to then sell covered calls on it. So I look for and currently do covered calls on stocks. The last stock I did a covered call trade on was a $30 stock. So I could buy several hundred shares of it. Not a lot of people think of it that way. You got to differentiate. So the difference, what's the versus about? The versus is, if you trade something looking to really exponentially grow your money and the stock doesn't move, it's not going to help you. If the stock is below $350 a share, it might not move at all. Worth trading in options, but it might be worth putting in a separate list of stocks that you want to do covered calls on. That's a whole nother thing, a whole nother ball game. The objective is twofold: to grow your money with options in one account, to grow your money with income in another account. Stock purchase in one account, options purchase in another. And those options, they got to move, man. Move. I'm talking stuff that I love to trade has $6, $7 a day average movement in the stock. Think about what the option does. Let's just take XSP, for example, the last trade I did. That stock index moved from 681 to 685. The same option moved from a $2 purchase to a $6 bid. And I was able to sell for a huge profit. You can't get that if you buy a $50 stock and it goes to 53 and you're not going to get that kind of return. 100% return doesn't come from that. Same thing with the $50 stock. If the option is $1 and it moves 25 cents, you might have not even made up the spread. And nobody might have ever told you that. And that's the purpose of this video. I want to help you see that the first step to stock market success is to realize what you're trying to do with the particular vehicle or asset that you're trading. The movement of a stock also is determined not just by, first I want to see, does the stock move? Then I want to see, does the options move? You can do that by literally going in and saying, okay, I'm looking at a chart. I see the option. I see the stock move from 100 to 150 from October the 6th to October the 12th. Okay. Now I'm going to go in and look at the options montage. If it moved from 100 and I think I said 100 to 150, well, let's look at the $110 calls. How did they move during that time frame? You can study the options chains on those particular option spreads on that stock, and you can see if the options price well enough for you to want to trade it. That's where the research comes in. And once you knock out the research, bada bing, bada boom, you got a list, man. And you're knocking out the list, looking for the stocks that, one, trade most optimum movement. Number two, price options well. Number three, price options well enough for your money and what you're risking in the trade. And number four, move not just once every now and then, but move a consistent amount of money and a consistent amount of movement. I would say at least minimum once a month. There's some stocks that move best around earnings. So you might have a stock that doesn't move once a month, but it makes a big move every 2 months. You determine if that's a big enough move for you and your money. My thought process here is, for my trading account, I try to grow the account balance by 25% a month. So if that's my objective, it helps me eliminate a lot of fluff from a list of, let's say, 400 stocks down to 10 or 15 that I am going to focus on. And now I'm going to go and do deep-seated research on those stocks. How do they move in different zones? How do they move going into earnings, out of earnings? Where's the window? Is it 3 weeks before, 3 weeks after? Those kinds of things. And that will teach you and show you the difference between trading a $50 stock versus a $350 stock. Remember, I'm your friend in success. I'll see you next time. Look, I like to leave people with a quote, and this is a quote my wife gave me. An ounce of doubt can change everything. You are the maker of your own success, and you can achieve it in the stock market. The number one thing to do, and I know this is cliche, but it's true, just don't give up. When you get knocked down, learn, get back up, get right back in there. Okay, that's video 1. Whew. Sorry, guys. My studio got rather hot. And it's pouring outside, which is why I'm dressed this way. All right, what do y'all think about video 1? You get something out of it? Let me know. That is a real key, because I did that when I was a younger trader. Some of my first trades were on stuff like the QQQs, when you could buy the options for 25 cents. And I continued to trade certain stocks. And stocks have what I call a window, a lifespan of movement. Generally, on really, really hot stocks, it can be 10 years. A lot, it's less. You're trading the stock for the movement. You don't care about whether the stock is your friend or whether it's even a stock that you would care to own or be associated with. You're trading the movement in and out of that stock, and that's what matters. And if you get stuck trading stuff that doesn't move, you'll hurt yourself and not even know it. All right, let's move on to the next video here. Oh man, this is a good one. This is an idea that a friend of mine gave me. I have 2 different friends. One is a day trader, and he does about $25,000 a month trading. The other is what I call a focused position trader, and did $5 million last year. And he's still a teacher because he loves what he does. I didn't do $5 million last year in the market. I don't know about you. So what's the difference? And that's what we're going to talk about. Let's get into this one. Okay, 3, 2, 1. Hey everybody, welcome back to the Rob Review. I'm your friend in success, Robert Morris, and I want to talk to you today about how you can steal a $5 million trading strategy ethically and keep it for yourself. What do I mean by that? And how do you know that it's worth that? Well, because I took this right out of the trading plan of a friend of mine, really more of an acquaintance, but I know enough about him that we've talked, and I know that he did $5 million a year, $5 million last year trading the market, trading options. And that sounds like a lot of money. Some of you, it may not sound like a lot of money, actually, because some of you think, $5 million a month. But for a single trader trading his own money, that is crazy lifestyle money, especially when you think none of his income comes from those actual trades. His income comes from a different amount of money over here that he does calls on. So that money funnels into other investments. It's powerful compounding stuff. So what's the difference between A guy that does a $5 million a year portfolio, like growing his money at that rate, versus somebody that might do $10,000 a month or $25,000 a month. Here's a story for you. I know a guy that learned to trade back when credit cards were not so outrageously priced as far as interest, and he would take an advance on a credit card, go and day trade the market with that money. And he would learn, take it to zero, go back to work, pay off the credit card, go back to trading, quit his job, full-time trading, learn, take it to zero. He did that 6 times before he funded his account and paid back the American Express, Capital One, whatever card, and never returned to work. Day trades. That's a great lifestyle, right? Not for me, for him. I don't like day trading. He literally sits in front of a computer, and when he's trading, he doesn't have a bathroom. He will literally, like, he's got a cup there type of thing. That's the difference between a day trader and the other guy I know. He learned how to trade by just trading focused options. He started out with 1 trade a month of his own money. I don't know how many times he had to fund his account, but every trade taught him something. And over the years, he built from 1 trade a month with real money to 2 trades to 3 trades. Now I think he does about 3 trades a month. All in all, 36 trades a year. And he does $400,000 to $480,000 a year, a month. So that's $5 million a year in stock market profits. So the reality of it is, guys, is what kind of lifestyle do you want? You know, do you want to have a job trading? Because both those guys, statistically speaking, make really good money, and the lifestyles really aren't that much different as far as money is concerned. But to me, they're hugely different as far as how much work they put into their strategy, how much time and computer screen time, which is important to me, they spend, and how much lifestyle they have outside of their trading business. What's the difference? The difference is, one, the $5 million a year trading strategy is focused around quality over quantity. Now, that means that he's not always obviously doing. Actually, most of the time, he is doing nothing. And he's sitting on his hands, letting small moves go by, I call hiccups in the market, that other day traders are popping and popping and popping. But he is waiting for a particular move to set up, and now he misses some trades that he could have profited on. But that's okay, because his average gain per trade, when you average it out over the year, is 200%. That's like Paul Tudor Jones. You know, I don't know if y'all know him, but he's a trader that focused around, I'm only going to trade when I can get a 5-to-1 risk reward return on my money. Now, that's not me. I'm going to build to that place, because my ideal trading strategy is eventually to build to 36 to 40 trades a year, 4 trades a month or less, waiting for big moves to set up, quality over quantity, versus the other trader I know that's more of a day trader does 52 trades a month. That's a trade a day or more. I know traders that do 100 trades a day. That sounds extremely stressful to me. I'd rather be in the $5 million trading strategy pool. The second piece is they do both practice, but one doesn't have as much time as the other does to practice. One practices 10 trades for every 1 trade they do. The other one practices almost 100 trades for every 1 real trade he does. The results speak for themselves. One trades off of smaller chart hiccups. The other one trades off of big chart setups. Now, obviously, those happen less and less and less than the hiccups. But he's able to go into a trade with hundreds of thousands of dollars and not get whipsawed out very quickly. The third piece of this is the formula that one trades versus the other. The other is not looking for options trades that'll pop up $1 or $2. So one is looking at more stocks than the $5 million a year guy is. He trades about 10 stocks, a focused look around 10. He might have 15. I doubt he has more than 12, really. That 12 every year go up on a drawing board of possibly being eliminated. That's his roster. That's what he goes in to the game of the market with. Those are his soldiers to go to war with. And if one gets out of shape, he's got a list of 60 or more stocks waiting in the wings to replace the other one. The other guy that day trades, the 52-month trader, $25,000 a month revenue from his business in the stock market, he's looking at 300 stocks. It's about focused trading, in my opinion. Focused trading gives you lifestyle. Focused trading. And a lot of times, he's even culling down. The $5 million a year man is culling down to get rid of what he calls the okay trades. And he's trying to figure out, what are the setups that I need to stop trading to get rid of some of these okay trades and only have my money in excellent setups. And now it's going to be a constant tweak for the rest of his life. You're never going to be able to hit that and be perfect at it. But I'd rather be building a business that eliminates fluff than knowing that my strategy employs for constant fluff. And the preparedness is the same. The amount of work is the same. But the amount of action is not. And the amount of action is the amount of stress that's involved and the amount of money churning that you're putting into the market. I'd rather take less action with more precise, targeted gains. Be that as it may, that's the difference. There's your $5 million a year trading strategy. Focused, quality over quantity. Find setups that everybody that you know thinks is obvious. And trade with the flow of the biggest traders out there. Trade a small amount of stocks that really move and practice 100 to 1. Focus your time around preparedness versus taking action. And when you do take action, your confidence will grow because you have a better, more precise attack to the market. And your confidence is everything in trading. I'm your friend of success. Remember, if you can make $1, you can make $1 million more. I'll see you on the next video. Okay. Oh, man. Excuse me. That was the third video. I would do that again if I could, because I think that was a little lackluster, but I hope y'all got something out of that. I really do. Yes, that is no BS. I do know those two different traders. And yes, both of them have way, way different ideas of what they think is something they should be doing with the market. And I'm going to have to, my wife just texted me some kind of issue with the AC unit in our house. So I'm going to have to hurry up here. Okay. So The last video here deals with returns. One of the biggest trades I've ever seen done. For me, the biggest trade I've ever had is like a 1,000% return on, I don't even remember what it was now. You would think it would be a trophy on the wall for me, kind of like the biggest deer I ever killed type of thing, but it's not anymore. I'm so focused on researching this trade for here. I got a guy who just sent me some trades, and this guy did a 2,000% gain on a trade. And going back to the $5 million a year trading strategy, you can never know that you're going to hit a home run, but you can dial in your strike zone to where it's where you want it to be to hit a base hit. And then eventually you're going to knock enough balls out there into the market that one of them is going to be a home run. And that's where the 2,000% trade return comes from. So the idea here is, what is 2,000% returns, earnings versus warnings? The difference in trading those two things. And let's dig into that. Welcome to the Rob View, ladies and gentlemen. I'm your friend in success, Robert Morris, and today I want to talk about earnings versus warnings. 2,000% returns versus mediocre. 2,000% returns, earnings versus warnings is the idea, title of this video. What do I mean by that? We all know that the market is driven by earnings and interest rates. That's the two main drivers. All those other things kind of fall under that umbrella of earnings and interest rates. Typically, when interest rates are low, earnings are high. Right now, we see a strong bull market despite the interest rates. And that's where suspect comes into play, right? A lot of people are talking about the overpriced and overvalued, just pumped up prices of most of the stocks out there. I can agree. But a lot of people aren't doing splits anymore, so that's how that happens. What's the difference between a 2,000% return versus everybody else? Well, you can never know what your return is going to be. But I am a big proponent of only trading the catalysts that allow you to have the best shot at winning. And, you know, I'm not a baseball player. My brother was. I was a semi-pro skeet shooter. So in my sport, you always have a particular pattern that you're looking to set your gun up for. And you always look to pull the trigger the same way, breathe just so, have your mind focused on breaking the target. And in baseball, you know, I did play, you step up to the plate, and if you swing at everything, eventually you're going to learn, okay, my strike zone for my body, for my swing, for what I'm looking for is in this particular area. You learn your strike zone. Some of the best batters out there only swung at what they saw fit their comfort of a strike zone. So having 2,000% return, first of all, can be a life-changing trade, because at $20,000, let's say you put 20 grand into a trade. I don't want to do math wrong on YouTube. So let's just, that's $400,000 return in one trade. For me, that's life-changing money. But you never approach it thinking that's going to happen. It's just, you chalk it up as, man, that buck pranced right out into my sight and I dropped him because he was there. and he's got a beautiful rack on him, and I'll mount him as a trophy. And then you go right back to hunting for meat because you're in the market to eat, not to kill trophies. That being said, your best bet for getting a 2,000% return is to trade around known catalysts. And right now, one of the best ones is earnings. It happens every 90 days. And I can tell you that most stocks have patterns that set up either pre or post earnings. Most stocks have a 3-week window, either pre or post earnings, where the movement from earnings takes them off in a direction. And usually you can look for that direction to be going with the market unless you're in a bear market scenario and the company has really good earnings, or if you're in a bull market scenario and the company has really, really terrible earnings or they warn, which is why the difference. I don't trade warnings. I don't look to trade earnings during warning season. I only trade earnings during January, February, April, May, July and August, and October and November. The other 4 months, warnings months, March, June, September, December, those months are a lot less active for me as a trader. Doesn't mean I don't do trades, but I do a lot more catalyst trading of earnings during earnings season, and my money sits on the sidelines a lot more if you look at my trading chart during those other 4 months. That's because I know the strike zone that's going to work for me. And I'm going to swing when I know I got earnings momentum moving in my favor. Whether it's the idea that they've had good earnings going up and people have seen that the numbers are possibly going to be good this time and there's whispers. Whether it's that the company has set up every year, 3 years past, historically speaking, around this time to move into earnings, you can set yourself up to have the best possibility of hitting that good knocking out of the park home run. And if you land on a base hit, that's okay because it's still profit. That being said, earnings can be a place where the entire market moves because of the momentum of earnings. And not all earnings are created equal. January and February are really the best earnings of the year. October and November, good earnings. The other ones, July, August is kind of lackluster earnings. April, May, kind of lackluster earnings, but you can still make money. The proof is in trading around the catalyst. Focused trading around the catalyst. And knowing going into ahead of time before the release what the history of that stock is. The historical norms. Because historical norms let you know what that pitcher is going to be throwing. Fast, slow, curve. Is he good at that? Is he better at a fastball? Study your opponent. And your opponent is that stock in this particular scenario. Now, that being said, I have had earnings trades that I have traded right up through earnings. The problem with that is that you do take on added risk because you don't ever know if a stock is going to tank right after earnings. So there's a thing called insurance. Everybody has it when they drive. You should have it on your life. You should also get it on your trade if you're going to trade through earnings. You should buy a mimicked amount of contracts to mirror the opposite side of the trade that you're in if you're going to go through earnings. Instead, I prefer, unless I have a huge profit going into earnings, to get out the day before earnings is supposed to release. And I've never found myself really getting burned by, there's so much data out there now that you can pinpoint the earnings date pretty accurately without paying for a subscription service. That's all I got for you today, ladies and gentlemen. Remember, if you can make $1 million, you can change your life. And that starts with making the first dollar, and then the 10,000, and then the 100,000. And so if you can make $1, you can make $1 million more. I'm your friend of success, Robert Morris. I'll see you on the next one. Okay, guys, that's all I got for you today. I need to call my wife and check on the AC thing. So I'll see you on the next one. Keep in mind, this is a live thing. We're trying to do it on a regular basis. So hopefully, God willing, I'll see you next week. I'm your friend of success. Look, the stock market is about consistency over time. Make your plan, trade your plan, execute your plan, and know that you're going to benefit best if you focus on long-term wealth and use the stock market to be the vehicle to get you to buy those companies and build a position in, because wealth does come from investing, not trading. Trading is just a asset generating activity that allows you to have more capital than you would otherwise have to invest when the time is right, to invest in companies that you've already done research on and know you want to own. Got to play the disclaimer for you guys.
Any other Rob Review program are not to be considered financial advice. The views and opinions expressed in this program or any other Rob Review program are not to be considered financial advice, and all these strategies have their own inherent risk. If you act on information given in this show, you are doing so at your own financial risk. MAP. Productions does not take part in your positive or negative financial results. That is why I recommend you consult your financial advisor before acting on any of these tips. What worked for Robbie may not work for you exactly as shown in the show.